Hello, trading is closed on February 5, 2019. Before we go over yesterday's calls, I have to say for the next week I have personal business to attend to. I'm going to try to make videos, but if I don't make any for the next week, it is because something's happened to me. It's because I have other things on my plate. Now, yesterday we had lower targets. We said unless we gapped up, they should print. This one should print by early Wednesday. We gapped up, that puts us out of reach and cancels the call before the open. We have a similar situation today. We have a lower target, but if we gap up and take out these highs, the call's canceled before the open. Tomorrow's pattern is the one with the early high. Usually it's a positive day. Tends to rally all day, close near the high. On those infrequent occasions when that doesn't happen, it tends to drop in a straight line. During the day, MEJT said ultimately higher price it would print. They did. Now says this move is false, gives us this target. It isn't good to gap up, hit these highs, not be able to close over any of them. But again, all you need to do to invalidate the negativity is to take these highs out early. And if it's the market's intention to continue higher, that shouldn't be too hard. If we drop early instead, sharply, that's a different story. Here's the volatility index. Then here's the current one. Here's the old one. We've gone over under the Bollinger Band. If we move up, which is what happens if we drop sharply, that marks a high. Hasn't happened yet. Might not happen at all. I'm not risking money on DeMarc's combo sell signal. They have failed too many times, but if we start dropping, at least you could say he told you so. Doesn't mean I'm going to risk money on it, as I said. Now, here's your 200-a-day moving average. You've rallied in a straight line up to it. In general, when you rally up to a resistance level like that, you either gap over it or the resistance wins. If you look at this wave here, there is a clear count with wave C equal to half of wave A. So if that's a high, at least you got a Fibonacci support for a wave count that says it's over. But that's if we drop sharply. Hasn't happened yet. You take the high of wave 3, high of wave 5, cut it in half, there's this low. You take this low and this high, cut it in half, and that's where today's high is pretty much. So we have resistance from Fibonacci levels, and we have the 200-a-day moving average. We have lower targets, but and I'm still waiting for my Fed whipsaw, which hasn't happened yet. But all we need to do to continue on the up move is to gap and take out these highs. If we do it, we're going up. But be alert at the open if we drop smartly. We drop smartly, we can't take these out. We really have all we need to mark this as the end of the leg. So tomorrow's open's critical. Don't forget I might not be posting the next week, even though I'll try to, and that's today's call.